I think our next guest, Scott Bauer, Prosper Trading Academy. You may agree with that idea, Scott, that hedging had been a little bit too much in September and October, and we've just continued to have this rally in the last few days, record high after record high. It's interesting today because we have had the S&P 500 fluctuating, that VIX higher, so sometimes it's not great to see the fear, quote-unquote, fear index higher with the S&P 500. But overall, you think that a little bit of smooth sailing ahead?
I really do. 2 months left in the year here, and we may see a little bit of chop, but I do think we're going higher by the end of the year. And a lot of people are focusing on that Morgan Stanley article that was put out this morning saying the bullish run only has a few weeks left, through Thanksgiving. So maybe people are looking at that and elevating the VIX on that a little bit. But all signs to me point to a higher market by the end of the year, unless the Fed throws a big curveball into the markets this week. And I don't think they will do that. I mean, the market is already priced in the fact that the tapering is happening sooner rather than later. So unless they throw something in, Abigail, where, they see rates actually rising sooner than anticipated, which I don't think is the case, right? I think this market just grinds higher, and I think it's a great place to buy some protection.
Yeah, well, that's actually what I wanted to ask you about, because is it dangerous that we have the VIX at such low levels, not at historically low levels, but still below 17, below 20, so suggesting that maybe there's some complacency out there. Is that a warning sign? And in terms of buying volatility, I know that a lot of professionals say that that's not for the retail trader. How would you do that for a retail trader?
Retail trader, I think you can go in and actually just buy some puts in SPY or maybe in the triple Qs, which the volatility in both spaces there is very, very cheap. That's probably going to be a little bit better of a place for a retail trader than to maybe trade in the VIX at this point. Much easier access, pretty straightforward, and I would go out and buy some December puts or put spreads.
And more specifically, on a stock-specific name, you have a really interesting idea here that's not just a hedge, I suppose in some ways, around a possible drop, but certainly against inflation, and that's Costco. Very clever idea.
I love Costco. And as you just said, I really look at it as an inflation hedge and a growth stock really combined together. This stock has really escaped to this point any of the supply chain constraints. They're fully shelved. Everything at the stores you can get. And you know what? People are going to be flocking there over the next 2 months going into the holidays. I love the upside. Love that there's going to be, in my opinion, all-time highs. I am buying a December 17th expiration, 505, 520 call spread, $15 wide, pay about $3.50 for it. Look for all-time highs in Costco.
Great stuff as always. Scott Bauer, CEO of Prosper Trading Academy. Thanks as always for joining us for Options Insight. Taylor, back to you.